Are we together, guys? Can you hear me? Can you hear me? Mr. Gasco, Mr. Ian, good evening. Can you hear me?
Yeah,
Wonderful, wonderful, wonderful. So, without wasting much time, we just want to jump into the charts so that we see what is happening. What is happening? What is happening? Right. So, this is the current trade that we are currently in. Besides the VIX 75 buy that we gave, was it yesterday or day before yesterday? So this is also the other trade that we're in. So I just want to show you how we managed to get this setup, and also how where we're expecting this crash 500 to actually go. So let me just start from a higher time frame. Let me start from a higher time frame and show you what we're actually seeing, and what we're actually expecting to happen. So we're going to start with crash 500, then we'll go to VIX 75. Then you also tell me which other instrument you want us to look at. Let me try to remove all this because right now it's confusing. Mr. Gasco is saying you can't hear me. Others, can you hear me? Mr. Terence, can you hear me?
loud and clear. Loud and clear.
So I don't know why Gasco is not hearing me. I don't know what's wrong. So we just want to go through crash 500 so that we actually break down what we're actually seeing here. Right. So this is the daily time frame. As you all know, we always start from the higher time frames. The purpose of starting from the higher time frames is to get the overall picture of what's happening, to understand where an instrument is, where price is coming from, and where price is most likely going. Because if you don't have that understanding of where price is coming from and where price is going, you are bound to be trapped in between. For example, let's say someone focuses on 1 minute, 5 minute, and 15 minute without having a look at what is happening on the higher time frames, like the daily, the weekly, or the monthly. If ever you're only focusing on smaller time frames only without making or taking reference from higher time frames, you are going to experience what we call inconsistency in terms of profitability. You are going to realize that today you can actually make money, then tomorrow you realize that the same setup that you actually entered yesterday, if you try it today, it won't work. Because this is because if ever the momentum on the higher time frame, let's say the momentum on the higher time frame is bearish, right? Then you on smaller time frames, you are taking bullish opportunities. If ever you on small time frames are taking bullish opportunities and not aware of the higher time frame momentum, very soon you are going to be in losses, because at the end of the day it is the higher time frame momentum that is going to determine even where the lower time frames are going to go. The higher time frames are the ones that determine where the lower time frames will go, not the other way around. So this is crash 500. As you can see, this is crash 500, and if you check from from, let me just, okay, if you check what is happening, if you check what is happening, even if you want to zoom out, you can zoom out and actually see what is happening. Let's start with the zoom out. Let's start with the zoom out and see. So zooming out, we can actually all see that crash 500 is sort of like following a bearish trend. It's sort of like it has been downtrending like ever since it was launched in 2019. So this is what we are seeing: push down, lower high, lower low, lower high, lower low, lower high, lower low, right? So from this lower low now, this is what we are currently seeing. This is the pattern that we are currently seeing. We can actually see that this is actually a downtrend. So right now, what actually happened now, we are sort of like trying to see, is this the new lower high, like this? So currently you can actually see that overall, just looking at this zoomed out analysis, you can actually see that overall crash 500 has been majorly downtrending. But in as much as it was downtrending, there were also bullish channels as well as bearish channels in that overall. So I'm just going to show you, just I'm just so doing this, I'm simply trying to show you what we actually do whenever we analyze, so that you get me from where I'm coming from. So this is the overall channel that, so this overall channel, you realize that it can actually, the market can actually follow this overall channel for the whole year, following one channel. The market can actually follow one channel for the whole year, like this higher time frame channel. I'm not referring to lower time frames channels, I'm referring to the higher time frame channel. It can actually be followed and respected for the whole year. This channel, it can actually be respected for the whole year of 2023. So this is my channel. Let me just draw it nicely, right, like this, like that. So touch here, I want to touch here as well as touch here as well. I want to touch here and there as well, so that it's first touch and second touch there. At least if it does like that, it will make better sense, right? So something like this is what we are having on crash 500, right? Something like this is what we are having on crash 500. This is the higher time frame channel, right? These channels, like, if ever you have been part of our Zoom sessions ever since we started our Zoom sessions, you realize that at the top or at the bottom of the major of this major channel, at the top or at the bottom, at the top I'm referring to here, at the top there, without any question, we look for selling opportunities, because this is a higher time frame channel. That's a very strong level of resistance. Whereas when it's on the higher time frames like that, at the bottom there, we look for buying. Definitely we buy at the bottom, we buy at the bottom and sell at the top. That one, it's not a question, you don't even need to ask twice. Once the market comes to the bottom, we buy. Once it comes to the top, we sell. What we simply wait for is a rejection and a confirmation in lower time frames, then we jump into the trade. So I just want to share with you something that is very key, something that is very key, something that can actually help you even on the other instruments that you might try to analyze on your own, right? So when the market is downtrending, right, we notice that we have been in a major downtrend, right? It forms lower highs and lower lows, lower highs and lower lows, right? If ever we are to mark our structure right, if ever we are to mark our structure right, you realize that this law here, this swing law that was established here, it was broken here, right? So when a swing law is broken like that, When a swing low is broken like that, when a swing low is broken like that, this is what we call a break of structure. A break, it's simply a break of structure. Structure was, we are in a downtrend, yes, but the market actually managed to break structure there when it broke this previous low. After breaking the previous low, there, that zone, we call it a break of structure. So what the market, when it's downtrending now, when it's downtrending, we always expect the market to break to the downside and not to the upside. To the upside, I'm referring to your recent highs, which is your lower highs. When we are downtrending, we expect the market to break the lows and establish new lows and not break the highs. These are lower highs, because once it breaks the lower high, it's now a different scenario. It's now a higher high. It's now a higher high, which actually starts a whole new different overall market structure. So when we are downtrending, we expect our lows to be broken, right? So once the lows are broken, it's simply a continuation of, that downtrend. Here as well, we realize that that low was broken. I just want to show you something real quick. Same as here, this low was broken. I want you to get this. If ever you don't get this, I don't know, but I actually expect you to get what I'm about to say now. Right. So, as I said, when we are downtrending, it is the laws that we expect to be broken. Right? Number one. Number two, we don't expect the lower highs to be broken. Number two. Number three, we enter our trades either at a breakout of an upward channel. An upward channel, I'm referring to anything like this. This is an upward channel that was actually happening. Upward channel, there as well, something like this. Same as this one as well. This is also an upward channel. Let me just refine it. Let me just refine this one. Let me try to refine this one and put it closer. So you enter your trades either at a breakout of an upward channel. This is if ever we're in a downtrend, right? It's just the opposite when we're in an uptrend. So you can either enter the breakout of that upward channel. Same as here, you can also look for an upward channel. You can just look for an upward channel. You'll find it every time. You always find you find these channels. That's how the market moves. Even if it's going down, it moves and gives these retracements. These are bus stops that it actually rests before continuing to go down, right? So you can either enter after the breakout of the upward channel, or that's our first entry point. Either enter at the breakout of an upward channel. An upward channel, this is a channel that will be opposing the overall channel. The overall channel is going down. The overall market structure is going down, right? Price is going down, but that one, it's simply a retracement. It will simply be something like opposing like the overall flow. Like here, it was going up, then boom, going down. So either you enter after the breakout like that, breakout, you enter, retest, you also enter. Number one. Number two, you can enter at a major level of resistance. At a major resistance. Resistance, I'm simply referring to any support that was broken, it becomes a resistance. Any support that was broken. If we break a support, a major support, it becomes a resistance. Like what we can see there. Like what we can see there. Here, it was a support broken. You could have sold, retest, is now a resistance. You could have also sold. So Either, so that's our second entry point, resistance, major resistance. We also can enter our trades on major resistance. This is if ever we are in a downward, in an overall downward market, or in an overall bearish market, right? We enter major resistance or after the break of that upward channel. Then entry point number 3, we enter at what we call a supply zone or an order block. Someone can call it a supply zone or someone can call it an order block. Right. What is an order block? What is a supply zone? Just in brief, a supply zone or an order block. This is a zone where the market established or left orders. This is usually a zone where the market actually impulsively, the market usually comes from that zone impulsively. The market comes from that zone impulsively and breaks structure. So, for example, here, this side here, one can say this is an order block. So an order block, it can be the last bullish candle before the market went down, before the market dropped. Before this market dropped, which was the last bullish candle here that we can see, it's this huge candle here. That's our last bullish candle before that drop to the downside, right? So that is actually our supply zone, or someone can call it an order block. We are all correct. So if you check from that zone, that was our last candle before the market dropped and also broke this first upward channel, and as well went on to break structure here at the bottom. So that candle, that last bullish candle before the bearish push, that last bullish candle before the bearish push is what we call a supply zone or an order block. So that's our third entry point when it comes to a bearish market structure. We enter also at our supply zones or on our order blocks. A that's actually a bearish order block. Bearish order block. It will be the last bullish candle before the market went down. That's actually a bearish order block. So already I have given you 3 major entry points that we use to enter the market when we are in a bearish market. So for example here, just a quick example here. You notice that this was a support, right? Support, just like this. Okay, let me just put it like this. Okay, support broken. After being broken, tried to come back, never reached, came back again and reached. So there we are saying we could have taken sales based on that resistance, right? Based on the resistance, we could have taken sales. Number 2 entries, we could have gotten them based on the break of this counter trend line. Counter trend line, touch, break, you could have sold here, retest, you could have sold more. Right. Where is your target now? I've spoken about 3 major entry points. Where is your target? Remember, we're in a bearish market. When you're in a bearish market, remember what I said in the beginning. We expect the lows to be broken. So our first target is actually the low. The, the previous previous major low was this one. So this trade, you actually realize that with this understanding that I'm actually giving you, from the resistance there, from the resistance, we expected it to push all the way to these lows. That was our first target. So already this trade, one could have held it all the way from the resistance up until these lows were taken out here, which was actually that those are so many days of all day, which was actually a trade that was worth it. So when you have such an understanding like that, even if let's say you you are trading, let's say you didn't get this entry point at the top, or even this one. When you go to lower time frames, you identify entry points knowing that your target on the higher time frame is still hasn't been reached. So whichever entry points you look for on the lower time frame, right? You look for it having in mind that on the higher time frame, I'm still yet to reach my target. Once your target is reached now, once your target has been reached, this is more than enough money from this resistance upon the break here and the retest. This is more than enough money from there to there. This is more than enough money. So after that thing is done, from that resistance, after that move is done, that is what we call a full move from the retracement zone up until we take out the lows, the previous low. From the retracement zone, which is where our resistance was, up until we took out this low, that was actually a full move. This is a full move from there to there. So this was one full move. One full move. So whatever you were doing, whatever you were going to do on lower time frames from here to here, your mind is based and is focused on taking sales. Your mind is based and is focused on taking sales. Why? Because our overall market structure on the high time frame hasn't shifted. That's why we are still focused on sales, and as well your target wasn't reached, so you're focused on sales. Done. Your target was reached, right? After your target has been reached, after a full move has actually happened. A full move is from the retracement up until you take out the lows. So the next move that comes is what we call a move that opposes the overall flow. The overall flow, remember, is bearish here. So how do you enter such trades? Trades whereby the market is opposing the overall flow. Remember, the overall flow here is bearish. You simply use a counter trend line as well. That counter trend line is there to guide you. It can also help you to come out of your cells. These cells that you enter there, number one, you can come out here on the lows upon the break, or as well use this counter trend line. Use this counter trend line. For example, here after the market comes and breaks it there, you can actually decide to come out of all your cells that you would have been holding from the top. So after the counter trend line is broken, we know that the market has to push up. Why does it have to push up? Remember, when we are going down, it has to push, retrace, push, retrace, push, retrace. So it has to give us a retracement after every full move. This was a full move from taking the lows out and creating a new low. That's actually a full move, right? After creating the new major low there, we actually expect the market to go back up, give us a retracement. A retracement. So the retracement, how far the retracement is going to be, it's going to be dependent on the market. We don't determine how far a retracement is going to go. So if you check our new lower high is that level, right? If you check, the market never even took out this lower high. He did taken out this lower high here, this lower high, the market was going to start moving in a bullish market structure, but it actually failed to break this lower high and actually created a low that is actually lower than this high, which is actually a lower high, right? So this buy you could have entered based on this counter trend line. Remember your entry, your entries now, your entries, you can use your lower time frames, your 15 minutes, your 30 minutes, your 1 hour. They are okay when you're entering for the sake of getting a smaller stop loss. But for the targets, use your higher time frames. Your higher time frames they give you, because if ever you're using your higher time frames for your targets, it will give you that maximum potential. You benefit the most out of a trade. You benefit the most out of a setup. So entering here upon the break here, where are we targeting these buys to reach to? Right, we look to the left. The left that we're looking to is this immediate left here. Looking to the left, we look at either our previous highs. Our previous highs, this was our first previous high, right? First previous high, our second previous high, our third previous high. Those are actually levels of resistance. If you check, these are actually resistances because it resisted, dropped, resisted, dropped. So these are actually resistances. So one way of looking for targets is using this resistance that are to the left. Looking to the left, so this trade you could have held it. So your first target was going to be TP1, TP2, TP3, right? TP4 was actually the supply zone. That was your last TP. TP4 was your. So if you check 1, 2, 3, this trade you could have actually made a lot of money just from here to the first TP. Just from here to the first TP, you could have made a lot of money. Second TP, third TP, what, up until it reached your supply zone. Remember what we said, our cells, we take them either on the supply, on the resistance, or upon the break. So here we realize that we actually had this channel to the upside. So after you make money with these buys, whether you take on TP1, TP2, whatever, but if ever you're smart enough, you realize that once we reach TP1, you shift your stop loss higher and higher. We reach TP2, you shift your stop loss high. TP3, you shift your stop loss high up until the market takes you out. It will actually take you out on a good profit. So after we reached our zone there, we realized the market formed this channel to the upside. Upon the break here, you could have sold immediately there on the top. On the top there on the supply, you could have sold. Then as well as upon the break, touch, break, retest, you could have sold as well. Selling here, where is our target? Remember, we are still in a bearish market. Why am I saying this? The market failed to break this recent lower high. This recent lower high wasn't broken, meaning we are still in an overall bearish market structure. So when we are still in an overall bearish market structure, we expect our lows to be taken out. So entering there, your target is what? This major low. This is your major target. Major target. From the retracement zone, which was this level, up until you take out the lows. That's a full move. So the first full move happened, then we retrace. Full move, retrace, full move happened. All the way you could have held this trade beautifully up until you take out the lows. Full move happened as well. After every full move, we expect a what? A retracement. This is actually a repetition over and over and over and over. The market will always repeat this formation. After every full move, we get a retracement. After every full move, we get a retracement. So here, after this full move was reached, after it took out this low, after it took out that low, you realize that we actually established this trend line. So this was actually a lot of money from that zone up until you took out the low. That's actually a lot of money. Then you wait for market structure to form. Waiting for market structure to form, you are simply waiting for the zone where you're going to enter the retracement that is going to happen to the upside. So the retracement that is going to add to the upside, if you remember, this is our major lower high, right? If you check, this major lower high wasn't even taken out here. The market, in as much as it retraced, it never took out this lower high, right? If you check where the market actually respected, it actually respected. There is a resistance that was here. There's a resistance that was there. This is a resistance. This is a resistance, right? This is a resistance. It was a support, then it was broken, retested. So it was simply the market came and respected that zone. So even here, the counter buys you could have entered them based on the break of this counter trend line. Then for your targets, you do the same. You look to the left, look for the previous levels of resistance. TP1, next major resistance, TP2, TP3 here. That's the next major resistance that I'm seeing. Up until we reached that yellow zone, which was TP4. So 4 TPs all the way, you could have made good money just taking the buys. You are taking these buys knowing that so long we don't break this recent lower high, the market is simply going to continue dropping. So it didn't break this lower high, is respected there. There you could have ended there on the resistance, or done the same thing, draw a counter channel to the upside. Once you draw a counter channel to the upside, you what? Wait for the break, retest, you sell. Selling here, where is our target? Remember, the market is still overall bearish. Target is the previous low. Previous low, this was a full move. From there to the previous low, you could have held this trade. You could have held this trade from there all the way to here. What you do even on lower time frames during the journey from the retracement zone to the to the taking out of this low. You can scale in on lower time frames. If ever you get any setups on lower time frames, you can also scale in sales, knowing that my major target hasn't been reached. So major target was reached, right? What are we now expecting? What are we now expecting? Remember, the market is still overall bearish. So for the market, for this market to say, for us to say this market is now a bullish market, it has to come and break this lower high, this major lower high. It has to be, if it has to come and break the major lower high for us to say we are now in an overall bullish market, right? But so far, overally we are still in a bearish, right? So right now, after taking out our lows, remember, it's still the same thing. We're expecting a retracement now. We're expecting a retracement before we continue down. We're expecting a retracement before we continue down. So where do we get our entry? Same thing, counter trend line. I have this trend line here. You can actually identify this trend line, right? So here now there were two scenarios that actually happened after taking out these lows. Remember, after taking out the previous major low, you could have actually closed your sellers after taking out. So same as here, you could have also held this counter trend line to the downside. That was also a valid trend line. This was a valid trend line, right? If you check that trend line, it was broken and retested. So after breaking and retesting, you could have gotten buys there. These buys, remember, your targets, you look to the left. Looking to the left, you are looking for either a resistance. We're looking, that is these zones, TP1. That was TP1 there. And I have another resistance there, TP2. If you check my resistances, I'm not even looking further here. I'm looking here to the immediate market movement. I'm not looking further there. I'm simply looking here. So if you check, TP1 was reached 1, 2, 3, 4, 5, 6, almost 6 days of holding. TP2 was reached. So you could have made money with this buy. You could have made money. So same as now, right now, what I'm now expecting now, this is a downward channel, as you can see. This is a downward channel, right? So this downward channel, if it continues going down, it's fine. There's no problem. There's no problem with that. It's fine. If it continues going down, it's okay, because we have this downward channel. If it comes all the way there, it's fine. We'll take our major buys from there up until we hold all the way to the top, right? But if ever it doesn't come down now, if we zoom in now, so this is the current channel that we're having now. The current channel that is going to determine the entries that are going to enter for Crash 500. So what I'm doing on Crash 500 now, you can do it on any instrument of your choice. You can do it on volatility 75, you can do it on step index, you can do it on any instrument. So this is a downward channel, as you can see, right? This is a downward channel. How could you, so remember here I spoke about the buys, TP1, TP2 was reached. How could you have gotten the sells, right, for this downward channel? Simple thing, same thing over and over again. You use your counter trend line. Counter trend line. This is a counter trend line to the upside. The break and the retest, it's simply your opportunity. The break and the retest was here. Break, retest here. You would have actually sold there. Selling here, your target now is the lows. Remember, so long we are still bearish, we expect the lows to be broken. So you could have actually held this trade all the way. Imagine holding a trade for 2 weeks, holding and maintaining one position, simply scaling in more trades on lower time frames. That's the highest level that you can actually benefit the most from opportunities on the market. If I want to make the most out of market opportunities, follow what I'm actually telling you now. So right now we are in this bearish channel. Target here, target was reached. So after target was reached, we expect a retracement. Remember, this is a full move from the retracement up until we take out the low. It's a full move. So after a full move, remember what I said, we expect a pullback. That pullback we expect, if it takes out the lower high, if it takes out this lower high, we know that the market is now bullish. We are now expecting a new market structure to start to form. But if ever it doesn't take out, it's still fine, but we still expect a retracement after every full move. The full move is from this level up until we take out the lows. After we take out the lows, we expect retracement. So this retracement, how far it's going to go, it can go as further as it can go. The maximum level here that it can reach is this lower high resistance, right? That's the maximum level. Then let's look at other levels where it can actually bounce. This is also a resistance. So these will be your targets now for the buys. The buys that you're going to take here, your targets, this is your first target, second target. So this can also be another target that you can actually use, this level here. Those are now your targets for the buys that we are now expecting. Why are we expecting buys? Because we have finished a full move. A full move is from a retracement zone up until we take out the lows. Retracement zone, take out the lows, that's a full move. After a full move, we expect a retracement. So on either of these levels, we expect the market to give us a retracement. Once you get the retracement, we know that even as we will be going up, it will form a channel going up. It won't just go up in a straight line, it will form a channel. So that if ever it fails to break this major lower high, we expect something like okay, let's say goes, then fails to break there. Our cells, we are going to enter upon the break and retest there. We enter our cells. Where is our target? Previous low, it will be around this level. So this is the whole matrix. This is the whole matrix of the market. This is how the market will always move. When you're going to lower time frames, you're simply going there to look for an entry point, but using the major higher time frame analysis that you'll be having. So right now, I'm expecting beautiful buying opportunities for Crash 500 that are going to hold. We are going to hold for quite a number of days. So this is what I'm looking at. This is what I'm looking at. This is what I'm looking at. So right now, we are simply waiting. Right now, the secret now is simply to wait patiently. The secret now is to wait patiently for the opportunity. So here there are two ways you can enter about this trade. You can either wait for the break, the daily time frame breakout to happen of this counter channel, of this downward channel. You can wait for that break. Once that break happens, you find yourself in you can find yourself in the retracement. You simply scale in more trades. So you can wait for this, or if ever you go to lower time frames and identify any entry point or any confirmations for buys. If ever there are any confirmations on lower time frames for buys, you can actually start entering those buys, because that will lead to the break there. But so far, this is the whole matrix. This is the whole matrix of the market. This is how the markets are coded. This is how, look at any market and apply what I'm telling you here. You always find serious success. This is how you can actually hold trades for days, for weeks, for even months of holding the same positions. Having this understanding, you will be scaling in. You will simply be scaling in. If ever you get any setups on lower time frames, you'll simply be scaling in. So guys, that was it. That is it. See you in the next upcoming episode as I review more of the secrets that I've discovered based on experience and based on a lot of hard work that I've been putting in the market. See you on the next upcoming videos. Make sure you subscribe, make sure you like the videos.